Hello, everyone. Happy new month to you, and welcome back to our weekend gold market analysis series. Last week, gold took a noticeable hit amidst concerns over US trade policies and a 0.3% uptick in the core PCE report from the United States also stirred up some inflation worries. As the previous week wrapped up, we saw back to back bearish candles, as you will see right on your screen right now. This was actually our trading setup from last week as we saw price break down both the um, ascending trend line and of course our key level at the 2925 level to insight about a um, 800 pips move to the downside. And of course the back-to-back bearish candle we notice here during the second half of the week hinted that traders were taking profits and rebalancing their portfolios as the month of February came to an end. Now, as we step into a new month, the big questions is on everyone's mind. Will gold prices continue to fall after the recent losses, or could the looming 25% tariff on Mexican and Canadian goods, which definitely is taking effect next week, coupled with recession woes, trigger a flight to safety, hereby boosting gold prices? Well, in today's session, we will be technically breaking down these factors in simple, clear terms. I will walk you through the key price level to look out for next week, the prevailing trend, and the potential trading opportunities emerging from this complex market dynamic. Before we proceed, please note that this presentation is for educational purposes only, a tool to help you think critically about the current market dynamic, and doesn't constitute financial advice. Always consult a professional before making any investment decisions. With that said, here, let's jump right into the chart and explore what the gold market have in store for us this week. My first point of contact on the gold chart is going to be on the daily time frame, and in fact what you're looking on your screen right now is an historical data that comprises the trading activity in the last 12 months, that is 1 year approximately. And if you look at this, you will see that the momentum has obviously been bullish since the month of March of last year. We saw price break above that ascending trend line in the month of March of 2024. And since price broke above this trend line, you can see how price had consistently respected that trend line till the present moment. Now we are back into March again of 2025, and my concerns right now is whether or not price is going to come back again into this trend line, maybe to respect it one more time to continue the uptrend move, or even break it to the downside to incite a massive sell-off. And of course, you know how we use our ascending trend lines in this community. As long as price remains above them, we want to be looking out for patterns and structures that support buying ideas. The only condition that will make us sell is for this ascending trend line to be breached and broken to the downside. However, there's still a tendency for us to be part of some bearish move in this regard. As you will see, if we look at the distance between the current price right here and that ascending trend line, we are looking at over 1,300 pips move. And of course, we want to be part of that move if ever it's going to happen. Now, zooming into this current structure, that is looking at what has been going on here since the month of October, I was able to spot a key level to work with. Now, my key level for next week is highlighted here with the pink color. That's the 2785 level, an area which has played a significant role in determining the direction of price action in the last 4 to 5 months. Now, if we go back to the month of October of last year, we saw how this level served as a strong resistance, inhibiting buyers from breaking through that structure. The same thing also happened here during the last couple of days of the month of January of this year, but fortunately for buyers, they successfully broke out of the structure at the beginning of last month. And from a technical standpoint, whenever price action breaks out of a key structure like this, we expect that some point in time price is likely going to come back, retest the structure or even the ascending trend line to continue that uptrend scenario. Now, will this be the case as we head into the new week? Will price ever come back to retest the structure or even break down that structure? Well, to answer this, we will need to scale down into our 4 hours time frame, which we are going to be using to identify a structural detail that will guide our trading decisions around this technical structure. But before we go into the 4 hours time frame, let's take a quick look at the economic calendar to see what important data and events that are coming up next week, and of course will influence the sentiment around this particular market. Now, on the economic calendar and based on the asset we are looking at for this week, we are going to be focusing on high impactful event from the United States. Now, the first impactful event will be coming in on Monday, March 3rd, and we are looking at the ISM manufacturing PMI. This data measures the health of the manufacturing sector in the United States, and when the PMI is above 50, it signals growth in the manufacturing sector, which is positive for the US dollar. And if the reading comes in below 50, it suggests contraction, which can weaken the dollar as it points to a slowing economy. So we look forward to see what the actual data is going to be like on that one. Then on Wednesday, March 5th, we are looking at a labor-oriented data, that is the ADP employment change, a monthly economic report that provides the number of new jobs added in the United States private sector. And if we have strong numbers here, it can boost the US dollar and signal a healthy economy, while a weak number might put pressure on the dollar by suggesting slower growth. So on that same day, we are also going to be looking at the ISM Services PMI, another index here that measures the performance and expectations of the service sector in the United States. Then fast forward to Friday, March 7th, we are looking at two labor-oriented data. We have the average hourly earnings report, and this measures the change in the pay for workers in the United States, and it is considered to be a key indicator of inflation. Then on that same day and simultaneously is the almighty non-farm payroll report, a data that shows how many jobs were added or lost in the US economy, and of course this exclude the farming sector. A strong report usually signals a healthy economy, which can lead to stronger US dollar, while a weak report can have the opposite effect. Now, these are the major events we are looking forward to next week, and trust me, the anticipation of this event is already reflecting on the chart. And what we are going to be doing now is to go right into the 4 hours time frame to try and understand how market participants are anticipating these events, and this will be giving us a framework to guide our trading decisions for next week. So scaling down into the 4 hours time frame, this was what I was able to come up with after taking into account the character of price action in the last 4 weeks. And if you do that correctly, this is what I am seeing here. Of course, we saw price action hit a record high in the month of February, testing the 2,955. And ever since price tested this zone, we have seen how it had become difficult for buyers to break through the structure. And this has resulted into lower lows and lower highs, as you will see here, showing signs that profit taking activity is going on. And of course, whenever price action hits uncharted territory like this, it is expected that those who had capitalized on that bullish move may want to start taking some profit out of fear that price may crash from this particular area. Now, the question for me here is how far will this bearish momentum go before the next wave of bullish momentum will happen? Or is this going to be the beginning of a massive sell off of the gold commodity? Now, the structure here gives me an insight into what is going on. Well, as you can see, the key level we identified on the daily time frame remains intact at the 2,785. And of course, we expect to look out for buying ideas above our key level. However, looking at where price action is right now, we can see price has found a support around the 2,830, a level which you can see here at the beginning of the month of February, serving as a support line. We saw the breakthrough of that structure. And during the end of last week trading session, we saw how immediately price tested that support line. We saw buy pressure resume again. Could this be a platform for the next wave of bullish momentum? Or are we going to be seeing price break down the structure to inside selling ideas? Now, to help us navigate this, I have a descending trend line here, which beautifully shares a confluence with that 2,830 area. So for me, if price remains above both this trend line and the 2,830, I will be looking out for reversal patterns, maybe like a double bottom structure, head and shoulder pattern, whichever case it comes, to continue that uptrend move. And of course, add more positions if price breaks out of this $2,880 max. So for me, I will be looking out for buying ideas around this particular structure. However, if price action goes ahead to break down both the trend line and the 2,830, I want to join a sell at the retest of structure. And of course, a sell from this area into our key level, we are talking about 450 pips move. And as soon as price gets in close to that key level, we move on stop losses, secure some profit while we monitor to see how the market will react to this key level at the 2,785. If price breaks down the key level, this definitely will be welcoming more selling ideas. But if sellers find it difficult to break through and we begin to see buy pressure resume here, it's called welcome new buying ideas from this particular area. So trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring price action around this current structure, maybe for the first 10 to 11 hours, to give you an update on what I think is likely happening for the first half of the week. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. If you haven't yet, consider subscribing to this channel for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.